Thank you for joining. My name is Sean Moss. Today, we're going to go through the basics of down payment programs and talk about what every agent needs to know. We may have some loan officers on here. Feel free to chime in. Let's keep this interactive using the Zoom chat feature, or the questions feature rather. If you have questions as you go, um, we've also got Melinda, Fern, Veronica, and Tamara with us from our down payment resource team. That includes marketing, research, and account management. So you've got a lot of brain power here to help you answer your questions or get you the resources that you need. What we want to do today is go through the basics of really the three most common types of homebuyer assistance programs, all in an effort to help you connect home buyers to the down payment help they need. That's at the core of our mission as a company. We track and monitor all of the homebuyer programs for down payment assistance, closing cost help, tax credits, and more all over the country. There are programs in every market. We'll give you a quick overview of all that before we dive into the three most common types of homebuyer assistance out there. So a little bit more about us. There are about 2,300 some homeownership programs around the country. We monitor the funding status, repayment details, benefits, how much assistance they can get, contact information, links and resources for you, and much more. And we make all that available through partnerships with lenders, with MLSs. Many of you are members of some of our MLS partners. We'll get into that a bit today too. We integrate this information into those partner MLS platforms, and we have obviously downpaymentresource.com, our Down Payment Connect tool, and other ways to help you understand the availability and opportunity of DPAs in your market and broadcast those opportunities or share them with renters and prospective home buyers. So we're going to talk about some of the similarities and differences of all of these programs. And basically, our hope today is to give you all of the information and intel and resources and tools that you need to confidently approach prospective home buyers about the opportunity to purchase a home. And more importantly, to get many of them off the bench that have sidelined themselves because they don't think that this opportunity is close. They don't think that they can buy a home now. They think they need more of a down payment than they actually do, or suffer from other misperceptions that prevent them from reacting to your marketing and pursuing homeownership seriously. Now, what are we talking about when we say homebuyer assistance or down payment assistance? These are, and we're going to get into the details, but essentially, and to perhaps oversimplify, these are loans, grants, tax credits, and other programs for eligible homebuyers that can help them get their down payment faster than they otherwise could have or realized that they could have, help cover closing costs. We'll talk a little bit about what that means when you're submitting offers and trying to remain competitive in a bidding war, super competitive, fast-paced market. And it also helps these potential buyers get into a home sooner than they otherwise could have. Now, with that in mind, let me just kind of break down big picture some of these program types. Now, we track and monitor every program from every state housing finance agency, every local housing finance agency, every municipality, nonprofit, and other types of organizations that have any sort of home buyer assistance for purchasers. Now, down payment assistance is by far the most common category of programs, and we're going to break these down. But I do want to point out a few things. Down payment assistance, that term is a pretty broad term. There are many features of down payment assistance programs. They vary by program, they vary by funding source, they vary by provider, whether it's a housing finance agency or a city or a nonprofit. But I do want to point out that of all the down payment assistance programs that we track, 65% of them have deferred payments, meaning you get the second loan for down payment assistance, but you don't have to make the monthly payment for some period of time, perhaps the life of the loan. Many of them, almost half of them, are forgivable, meaning that at some point or over some duration, that down payment assistance loan is forgiven in part or in full, essentially becoming a grant over time. And then 39% of all of these down payment programs are both deferred and forgivable. Now, that's different from a grant. A grant is a true gift at closing. There is no subordinate loan or second lien. There's no second mortgage. And we track all of those as well. But we wanted to point out, at least at the highest level, that the term down payment assistance or DPA or DAP, you may hear these things called a lot of different ways, um, but they can mean a lot of things. So broadly, when we say down payment assistance, we're talking about these collection of programs, but know that in your market, there are, unique programs. Each one is different. They may or may not have certain features and characteristics. We will break that down to some extent as we go here, but just know that there are many different kinds of down payment assistance. And we give you all these details in many of the tools that we provide so that you can understand the unique nuances of each program available in your market. Now, down payment assistance makes up about 78% of all of the homebuyer programs out there. But we do at Down Payment Resource also track mortgage credit certificates, which are income tax credits, but they have to be obtained. That certificate has to be obtained prior to closing with the purchase of a new home. We'll get into those as well because that's a very common and very valuable benefit in many states. There are also affordable first mortgage programs. Now, those almost always come from housing finance agencies, but they can provide below market interest rates, lower or no mortgage insurance, 100% financing in some cases. So there are some unique benefits to some of these affordable first mortgage products that we track as well. And then there are some what I'll call outliers. And that's probably not fair, but there are housing choice vouchers, matched savings programs, and some other types of homebuyer assistance that we won't necessarily get into today because we really want to cover the most common types of homebuyer assistance, the most commonly available and utilized types of homebuyer assistance, which are down payment assistance programs, and then these mortgage credit certificates and affordable first mortgages. Now, these programs are everywhere. We commonly hear, oh, well, there's no down payment assistance in my market, or lenders are telling me that the funds have dried up for the DPA. Well, here's the thing. There's not just one. In every market, the state housing finance agency offers typically a wide array of mortgage and down payment assistance and sometimes mortgage credit certificate, tax credit options. So at the very least, every market has options through the state housing finance agency, and no state housing finance agency has shut down this year or for decades. So even COVID didn't stop the business of housing finance agencies at the state level. And in fact, many state housing finance agencies have had record years, and that's purchase business, not refis. Many state housing finance agencies have had record years this year, doing record volume to the tune of tens of billions around the country for not just first-time homebuyers, but for first-time homebuyer price bands, if you will. And it's also important, and we'll break this down later, to know that income and purchase price limits are market adjusted based on the medians in everyone's market. So yes, if you're in Southern California or New York, the income and purchase price limits are higher than they are in Mississippi, Missouri, Nebraska, South Dakota. So that's just the state housing finance agency. And then in many markets, as you can kind of see here, this doesn't mean there are no programs in the states that aren't highlighted. We're just highlighting the states that have the most programs. There are over 300 homebuyer programs in California, over 200 in Florida, over 100 in Texas. Every state has at least dozens of homebuyer programs available, but the state housing finance agency covers the entire state, and there are many local options as well in many of your markets. So yes, down payment assistance is alive and well. No, COVID has not shut them down. Many of these down payment assistance providers have leveraged remote or virtual homebuyer education and work from home models in order to keep their programs going. And we track funding status, whether or not they currently have money and they are currently active and available. So again, we give you all the information you need to know what's available and active right now, day in and day out in your market. Now, who offers these programs? I've kind of hinted at most of these. Every state has a state housing finance agency. Cities and counties get money from HUD or from tax sources or other means to fund their own down payment programs. Many municipalities have a housing authority, a community development department, a redevelopment agency, or something of the sort that administers and funds down payment assistance programs. There are nonprofits all over the country major regional players down to very local or hyper local nonprofits that also, by way of grants or donations or other means, fund down payment assistance programs. There are even many employers out there that, as a means of recruiting or retaining top talent, offer down payment assistance for the purchase of a home as an employee benefit or a recruiting benefit. And that's sort of tip of the iceberg. There are other kinds of down payment assistance providers, but that covers the most common or the bulk of them. Now, I've mentioned some of these trends. We do want to reiterate, down payment assistance programs have not gone away. They are not going away. Every state housing finance agency across the country has remained open the entire year, accepting reservations, supporting their realtor and lender partners, serving consumers, and experiencing record volume. So the converse is true. We're seeing record DPA volume this year. It's, we're not seeing down payment assistance go away. We're seeing the opposite. City, county, nonprofit programs still widely available, just as they were last year, the year before, 10 years ago. Homebuyer education is being done still pretty much exclusively online, which means these DPA providers, because homebuyer education is a common requirement, are able through virtual homebuyer education platforms to continue to offer their program. And I've mentioned record volume for housing finance agencies. That is in part due or compounded by continuously record low interest rates. I think I just saw this morning, for the 14th week in a row, somehow still we have set records for the lowest interest rate ever. So that's obviously helping. That's obviously driving demand. It's obviously an enormous opportunity for home buyers to take advantage of not just low interest rates, but the widespread availability of down payment assistance, and explore home ownership. Now, we do hear, of course, low inventory. Personally, I sort of question if that's accurately reflected. If we're having record purchase volume this year, is it that we have low inventory, or is this just a fast-paced market that moves that inventory so fast that at any one point inventory is low, but it's out there? People are selling, and so people are buying. Anyway, I won't get down into the inventory issue. That's not our expertise, and that's not what we're here for today. But overall, 80% of all, in fact, a little more than 80% of all down payment assistance programs are funded and available today. And that's actually a normal number. Not every down payment assistance program is funded at any given time ever. Some of these are cyclical, not at the state level, but cities and counties, they get allocations annually from HUD, or they rely on tax revenue. So a lot of these programs are cyclical, but at any one point historically, 75, 80, 85% of down payment assistance programs are funded and available. And that's where we stand right now. So in terms of DPA, everything looks normal, quite frankly, except for the high volume and low rates, which are both benefits. Now, just to take stock of where we were before we start breaking down the three most common types of homebuyer assistance programs, I'll go through this survey in just a moment because I want to reflect on where we were a year ago, pre-COVID. But Melinda, if you don't mind, if you can tell us, if we can launch the poll, how often do you work with a client who uses a down payment assistance program? So basically, how often have you, probably as a buyer's agent, worked with a client who themselves used a down payment assistance program? You can click your answer on the screen, and we'll give you a couple moments here to click your answer. Is that something that you've never done before, never experienced? Is it rare? Does it happen sometimes, or is this maybe a core part of your business, something that happens frequently because you market to first-time home buyers and actively participate in down payment assistance programs, or broadcasting them and working with them? And then Mel, if we get to critical mass here, let's share the results. Okay, let's see. So this is a pretty normal spread, I think. So we have a pretty big audience, but I can tell you that we do see in a lot of these webinars that for many reasons, either lack of awareness, lack of loan officer partners that they know can do these programs, or just different business model. Maybe you focused on luxury, or you focused on listing as opposed to being a buyer's agent. But for a lot of reasons, we see that many realtors have never worked with a client who used the down payment assistance program. We're here to give you the tools and resources you need so that for those of you that have never worked with a DPA program, or a loan officer who provides them, or a client who wants or needs them, we want you to have the opportunity and the skills and the resources not to be a DPA expert, but to put that option on the table and create buyers. In some cases, this is a way to create buyers, to create demand for home ownership by making sure they understand all of their financing options. And for those of you that sometimes or frequently use DPAs, there are plenty out there. As you probably know, if you're doing this frequently, they change constantly. Income limits change every year, at least once. Funding status can wax and wane. New programs come out, old programs go away. We track all that and we try to make this easier for you so you can focus on marketing as opposed to program expertise. So with that, let's move on. So this survey here was done by clever.com. It was their 2020 homebuyer survey. This was published in January, so I presume it took a couple of months leading up to that to perform the survey. So anyway, this is all pre-COVID, right? So the question that was asked of potential home buyers was, where do you intend to accrue or acquire your down payment? The second most common answer was from homebuyer assistance programs, second only to saving their own money. Now, that doesn't surprise us because we've seen increasing awareness, even among consumers who are always the last to find out, increasing awareness of down payment assistance programs. But what's so interesting is how far ahead that ranks from things like a gift from a family member, or a loan from a family member, or worse yet, tapping into investment funds or retirement funds to purchase a home. So this is where we were before COVID. And then, I think the data has shown, the statistics have shown this market has been rapid all year. DPA usage has been on the increase, but up to record levels. And awareness among real estate agents, lenders and loan officers, and also the consumer has been on the rise. And so that's why we're so heavily focused on making sure that you guys have the tools and resources you need to participate in these conversations and to recognize the opportunity to create a buyer when it arises, but also meet them with the solutions that they need. We know student loans are an issue. We know down payment is an issue. We have a solution for that. So before we break down the three most common types of homebuyer assistance, let's look at some universal requirements, or some very common requirements across all homebuyer programs, homebuyer assistance programs. The first, let's combat the myth that you need 20% down. Now, we didn't include it in today's presentation, but we've seen survey after survey suggest that, including one by the Urban Institute fairly recently, suggest that first-time home buyers, they think they need a much larger down payment than they actually do. For example, the Urban Institute did a barriers to home ownership survey about a year or two ago, and they asked renters, potential home buyers, how much they thought they needed as a down payment. Something like 3/4 of potential home buyers thought they needed 15 or 20% down or more to buy a home, just to flat out buy a home. And we all know on this call, that's just patently false. FHA, 3.5% down, conventional 5% down. Housing finance agencies have 3% down conventional products. There are other conventional opportunities for 3% or less down payment. VA, USDA, if the property's eligible, or if you've got a qualified veteran, those are 0 down, right? So just that misperception alone prevents so many prospective buyers from considering and exploring home ownership, that if we could just combat that one misperception, then we could open the floodgates to another groundswell of potential buyers. But across all these programs, they are only for owner-occupant buyers. So we'll hear some people ask sometimes, can you use these for second homes or investment properties? No. A universal stipulation for these programs is that you have to owner occupy the property you buy with that program, with that assistance, as your primary residence. Many of them also require a minimum buyer investment. That could be 500 or 1,000 or 2,500. It could be 1% of the sales price. It varies by program. But another form of buyer investment is the often mandatory attendance and completion of a homebuyer education course, which is equivalent to typically about an 8-hour course with HUD approved content that educates them about the home buying experience, but also what successful home ownership looks like. We're going to talk about homebuyer education here in a few more minutes. And of course, these aren't cash buyers. They are qualifying for a first mortgage and a down payment assistance program, and they have to meet all of those requirements. They have to have sufficient credit or a sufficient credit score. They have to have a good credit history. They have to meet the debt to income qualifying ratios. They've got to be income qualified. And so they have to qualify for a mortgage as well as the down payment assistance. So those are all kind of universal. So what we want to do now is break down the 3 most common types of homebuyer programs and show you some of the nuances, show you some of the differences, and get into especially like what is a mortgage credit certificate. So we're going to start with down payment assistance, and then we'll get into affordable first mortgages, and then we'll cover these tax credits, which are mortgage credit certificates. Before we do that, Melinda, let's launch the next poll. We want to know what % of your business comes from first-time home buyers. So we'll put that up on the screen, and you can click your answer on the screen here. Just tell us how much of your business, let's say this year, how much of your business is made up of first-time home buyers? And again, you can click your answer on the screen. All right, we'll give you another second or two to click your answer, and then we'll look at the results, and then we'll drill down into the 3 most common types of homebuyer programs. Okay, so this is interesting. That's a fairly even spread. So let's see, about a quarter of you, half your business is first-time home buyers. More than a quarter of you, more than half your business is first-time home buyers. So that's interesting. We usually see kind of this is skewed toward lower ratios here, but we've had a lot of buyers this year and a lot of first-time home buyers. So that's good. Now we can get that off the screen, but let's dive into the 3 most common types of home buyer programs. And we're going to start with down payment assistance. One of the first things I want to get into is what a first-time home buyer is and whether or not that's even a requirement of all of these programs. So what is a down payment program? It's the most common type of home buyer assistance. We've already kind of covered that. They're typically government or nonprofit funded. We've covered that as well. And we've also mentioned that sometimes employers will provide these programs. Now, how much money can they get? That depends. It depends on the program. It depends on the market. It can range from several $1,000s to tens of thousands of dollars in homebuyer assistance, even more in a select few higher cost markets. But that's kind of the norm, several to tens of thousands of dollars in down payment assistance. It could be anywhere from 1% to 5, 6, 7, 10% of the purchase price. Again, it depends on the program and the market. We've also talked already a little bit about the difference between sort of a second loan and a grant, but let me dig into that just a little bit too. A grant, we mentioned earlier, is a true gift. It's a gift at closing. There are plenty of down payment assistance programs out there that are a grant. They're a gift at closing. There is no subordinate loan. There's no second mortgage. There's no repayment. But if it's not a grant, it's a subordinate second loan. Now, those, you may hear these called different terms or whatever. We'll look at some of the acronyms and common phrases here in a few minutes. But if it's repayable, then they close on the property and they've got their first mortgage. They've got a second mortgage for down payment assistance, and they start paying on the second mortgage as well. And of course, they have to qualify with both payments, but they get that extra help up front. Now, those are often zero interest. They may have some other unique advantageous features. Then there are some that are deferred, a silent second. So if it's a silent second, the payments are deferred out of the gate, typically for anywhere from a couple years to many years to the life of the loan. And then maybe there's what's called a balloon payment down the road, where they don't have to make payments on the second, but they got the assistance up front, they got into the house, they grow equity over time, and then they just pay back the original balance of down payment assistance when they sell the home, refinance, transfer title, move out, something like that. Then some of those, as we looked earlier, about 40% are both deferred and forgivable. Now that means it could be forgiven at 20% per year for the first 5 years. And then after the fifth year, that second lien's gone. It's essentially a grant and they didn't have to repay it. Maybe it's forgivable all at once if they stay in the home as their primary residence for 10 years. And on the 10th year and first day, the loan is forgiven. So there's a lot of different options there. Again, every program's different, but it's important to know that because every program's different, that complexity is tracked by down payment resource, and we make that detail available to you so that in the moment, on the fly, as you're working with a customer, we put this information in front of you. Now, what can these funds be used for? Obviously, down payment, often closing costs as well. Some programs will allow the borrower or the buyer to cover some prepaid expenses. Some of them can be used for repairs as well. Now, that's less common, but sometimes these programs can be used to make livability or accessibility or other improvements to the home to make sure that it's move-in ready when the buyer moves in. Now, the first-time homebuyer myth, let's start with that. There is a myth that is somewhat prevalent that down payment assistance programs are only for first-time homebuyers. So let's start with that. They're not. 41% of all the programs we track do not have a first-time homebuyer requirement, meaning they are available for current owners, recent owners, boomerang buyers that may have owned previously or many years ago, maybe went through some foreclosure or short sale issues during the last housing meltdown. So it's important to remember the definition of a first-time home buyer, but also that not every down payment program even limits their program to first-time home buyers. That said, the sort of universal definition of a first-time home buyer, at least when it comes to down payment assistance, is simply that they have not owned a home in the most recent 3 years or had ownership interest in a home in the last 3 years. Now, there are exceptions and nuances to that for for divorcees, widows, and other scenarios. But to simplify, if you haven't owned a home in the last 3 years, you're a first-time home buyer. So even if there is a first-time home buyer requirement for a given down payment assistance program, this is the definition that will be used to determine if they are in fact, if that buyer is in fact a first-time home buyer. And then of course, more than a third, almost half of all DPA programs don't even have a first-time home buyer requirement. Now, I've already used a lot of terms here to describe down payment assistance programs and the features of them. So some of the things you may hear, we talked about grants. That's a true gift. If it's not a grant, then you're going to have a second lien or subordinate loan. That just means that the down payment assistance is in the form of a loan up front and is subordinate to the first mortgage, the primary mortgage. Now, those DPAs may be deferred, payments may be deferred. There may be an affordability period over which payments are deferred or the loan is forgiven. Shared equity, there may be some programs in some of your markets that will offer the down payment assistance up front and then expect in return down the road at the sale of the home an equivalent share of the growth in equity of the home. Not all the equity, just the equity increase from the time of purchase to the time of sale. That's far less common. We're not going to get into the weeds there, but those are some terms that you may hear used interchangeably or used to describe a broad category of programs that you really have to break down into their details. But again, that's what our system does. So as far as eligibility for down payment assistance programs, every program has, well, most programs have income limits. It's important to clarify that most do, because there actually are some that don't have income limits. Most programs also have sales price limits, but again, there are some that do not. Those income and sales price limits, as I mentioned earlier, are always market adjusted to reflect the median or some portion of the median income and median home price in that market. Now, most first-time home buyers are not buying at the median home price. Most first-time home buyers, especially younger ones, are not yet earning median income either. But know this, income limits are often, or at least we often see income limits as high as 120% or 140%, sometimes up to 200% of the area median income. That's the average income in the market. So we often see income limits for DPAs all over the country that are higher than the average income in that market. That opens up the door to far more buyers to be eligible for these programs. But does the buyer know that? And until they do, they're not likely going to explore home ownership or down payment assistance options. Same thing with sales price limits. We see sales price limits commonly up to conforming and FHA loan limits or even higher. So, again, they're market adjusted. Property location is an important eligibility factor. That determines which programs are even on the table to begin with. So I'll use, let's say, Metro Atlanta as an example. Atlanta, essentially, the city of Atlanta is in two counties. There's Fulton County and DeKalb County. There are DeKalb County programs that are not available in Fulton County and vice versa. But there are City of Atlanta programs that are available in either county within the city limits. Now, you may be in other markets across the country where similar scenarios play out geographically, where municipal boundaries change. You will see a change in the type and number and kind of programs that may be available. So location is an important kind of early deciding factor as to what is even on the table for down payment assistance. And crossing municipal boundaries when you're looking at properties, that can change which programs are available. Credit, not just FICO, but credit history is important. As we mentioned earlier, they do still have to qualify for a mortgage, right? They've got to get their first mortgage and qualify for that. And then most down payment assistance programs have a minimum credit score requirement of 620, 640, 660, somewhere in that range. It varies by program, right? There's not just one floor on credit requirements, but that's kind of the starting range for most down payment assistance programs. And then, of course, home ownership history makes a difference. If you are a first-time home buyer, then you qualify for almost any DPA that's out there. You could, just based on home ownership history. But having owned a home recently, as we just discussed, is not necessarily a disqualifier for down payment assistance. That may disqualify you from some of the options available in your market, but there may still be plenty of down payment assistance options, even if you currently or recently owned a home. Military service and profession can also increase the number of opportunities available. There are some programs out there that are hero programs or programs for veterans that are not available to everybody in the general public, but only to those who have served or are serving in the military, or those who are in maybe education or law enforcement or healthcare or first responders. So there are some factors that can add additional programs to the mix. Now, that's not to say that you have to be a teacher to qualify for DPA. That's just to say that everybody can look at all the options for down payment help that are out there. A teacher or a nurse or a veteran may find a few additional options depending on what's available in your market. So those are some basic high-level qualifying criteria. What are the advantages of a down payment assistance program? Well, there are a few obvious ones. You're going to lower the loan to value. More down payment, the lower the loan to value, right? You're also going to lower the qualifying ratios. The more that they can put down, the lower their qualifying ratios. That can have a big impact on qualifying for the mortgage as well as the down payment assistance. As you do both of those things, you potentially improve mortgage insurance pricing. So that's going to, if you can lower the LTV enough and the DTI enough, you could get better mortgage insurance, which then has the effect of potentially lowering DTI again. All of that, of course, is going to lower the monthly mortgage payment. That also, all of this enables them to supplement their cash to close, not just the down payment, but closing costs, right? So they could potentially supplement their own funds with down payment and closing cost help. And that's where I mentioned early on, I want to talk about making offers in a competitive market. So I'll digress here for a moment. Think of a buyer that maybe they've got 3% down of their own, and they go conventional 97%, or maybe they go FHA or whatnot. But maybe they get a down payment assistance program and they use a little bit more for the down payment, but then they have leftovers for closing costs. Let's say they've got $5,000, $6,000, $7,000 for closing costs. Now, this is going to depend on the market and the price of the home. But is that enough to cover all their closing costs and then go to the seller and say, you know what, I'll give you list price, but I don't need you to pay any closing costs for me. To the seller, that's list price without netting out any closing costs that others may be asking them for. Or you could offer them, a little bit above list price and not ask for closing costs. And anyway, my point is that's one way to go to a seller or go to a bid or make an offer that positions the seller to net more and positions you as having a more attractive offer, even though a down payment assistance program is involved. And in fact, because a down payment and closing cost assistance program is involved. So keep that in mind when you're working with these buyers too. This isn't just about helping the buyer. You can frame it as quite literally helping the seller net more from the proceeds of their sale if you don't have to ask them for closing cost help. All right, so other advantages of a down payment assistance program. If your buyer is getting down payment assistance, then they are potentially retaining their own savings. That leads to liquidity for them. They go into the house without having expended every last dollar that they have, so they have that emergency fund for something that might break. Now, hopefully they have a warranty too, but nonetheless, there are costs of ownership, as we all know, that you don't incur when you rent. So coming into home ownership, having retained more savings and being liquid, even if it's just a month or 2 or 3 months in reserves, we've seen studies even this year from major banks that have said a couple of months cash in the bank when they move in is a major factor in reducing default rates down the line. So that's another huge advantage of a down payment assistance program, letting them keep the money they have in the bank, at least enough to provide for a pad or some reserve should anything happen. And all of this, of course, increases the buyer's purchasing power. The more they can improve their LTV, their ratios, reduce their mortgage insurance, reduce their monthly payments, the more purchasing power they have. So if another few $1,000s worth of house gets them, the features that they want or need, that purchasing power can be had by utilizing a down payment assistance program. So last thing about down payment assistance programs, and this is almost universal to all homebuyer assistance, homebuyer education is often required. This typically equates to an 8-hour course, although increasingly there are online options, which allows your client to go at their own pace. These courses, or the content of these courses, is HUD certified. They're offered by housing counseling agencies, HUD approved housing counseling agencies offering this HUD certified course content. A certificate of completion is typically good for 6 months to a year at a minimum. So there is no reason for your client to wait to get this done. And in fact, it could be a great incubation tool for you. Have them go through their homebuyer education course, especially if you anticipate that they're going to use a down payment assistance program, or even if they're not. Study after study about these programs indicates that the content they learn is of value. There is a notable impact on the success of homeownership down the road in terms of reducing default, reducing foreclosure rates, and so forth, because they're learning, as I said earlier, not just how to be a prepared buyer and how to go through the home buying and financing experience. They're also learning how to budget, how to plan, what to plan for, how to be a successful homeowner long-term down the road. That's enormous value. And there's no reason for them to wait to do that class, because once they finish, they've typically got a good long time before they have to buy and they have to close before that certificate expires. So that was a breakdown of the most common type of homebuyer assistance, which was down payment assistance programs. Now, I want to jump into the next type of homebuyer assistance, which are affordable first mortgage programs. Looks like there's some activity in the questions and chat. Keep it interactive. If you've got success stories to share, if you closed a transaction recently where your client used the down payment assistance program, if you've got a great story to tell, I'll just throw this out there. You have our marketing and account management team. You've got our program researchers on the line here. They would love to hear that story and maybe follow up and do something with it. Generate some PR, some buzz, tell your story. So I'll throw that out there. Use the chat and the questions box for that. And let's dig into affordable first mortgages. So The next most common type of homebuyer assistance, what does this mean? Everybody that gets a DPA gets a mortgage too. So what's an affordable first mortgage or mortgage? Well, those typically come from state housing finance agencies. Every state has one, yours does. Often these loans can come with reduced interest rates, sometimes below the normal market rate, sometimes reduced mortgage insurance costs. So lower MI, lower payments, lower qualifying ratios, right? This can expand their first mortgage options. These can also obviously be combined with down payment assistance. Certainly, the down payment assistance options that come from the housing finance agency where the mortgage would come from. And sometimes they'll even layer, like a municipal, a local city program with the housing finance agency mortgage and DPA. Some of these can be combined with the tax benefit of mortgage credit certificates in some scenarios where they are available. We'll get into mortgage credit certificates or MCCs in a minute here. But what are the advantages of these affordable first mortgages? Obviously, they reduce the buying cost. You're reducing potentially interest, mortgage insurance rates, and so forth. That lowers monthly payments. Just as with a DPA, those kinds of benefits increase purchasing power. And as with a down payment assistance program, all of this can combine to expedite home ownership, to open the door to and get that borrower to closing sooner than they thought possible. So let me break down the last type of homebuyer assistance here that we're going to cover today, and that will round out the three most common types of homebuyer assistance programs. That is the mortgage credit certificate. This is a tax credit. This is not down payment assistance. It's not at closing assistance. They don't see this money at closing. This benefit shows up every year for the life of that mortgage. So it's not a one-time benefit either. You get the certificate, which you have to get prior to closing. You have to qualify for this and receive the actual certificate. It is an actual certificate prior to closing. And then every year when that buyer files their federal income tax, they will get a tax credit for a portion of their mortgage interest paid. Now, many of you are familiar with the mortgage interest deduction. That allows you to reduce your taxable income based on the mortgage interest that you paid. That presumes that you itemize. Now, there have been some tax changes recently that meant far more people did not itemize. And I'll also say this, and this came up in a recent conversation this week. Mortgage interest is always on the table. It has been for many years when tax reform comes up. Now, nothing major has happened to the mortgage interest deduction, and I'm not a tax person. We're not tax people, so I'm coming up to the threshold here for our expertise. But I will say, if you think about how often the mortgage interest deduction comes up in DC, then the value of a mortgage interest credit becomes even higher. This is an annual tax benefit. Every year that they file their taxes, they can claim anywhere from 10 to 20 to 30, sometimes more, percent of the mortgage interest paid as a tax credit. Now, the difference between a tax credit and a tax deduction is that a credit is a dollar for dollar reduction of their tax liability. It is lowering their tax bill dollar for dollar. A tax deduction, which the mortgage interest deduction is, that's lowering your taxable income. The benefit of a tax credit outweighs the benefit of a deduction. What's interesting about a mortgage credit certificate is that you can still deduct the remaining mortgage interest that you paid, but you get that tax credit first, typically up to about $2,000. So it's offsetting the mortgage interest cost. It's life of loan, so you get to use it every year. It reduces your income tax liability, could potentially increase your qualifying income. Some agencies that offer mortgage credit certificates will view that as, the potential to adjust your W-4 or an opportunity to annualize that income because they know that that credit's coming back at the end of the year and use it to increase qualifying monthly income. Some of these mortgage credit certificates can even be reissued through a refinance. So when the new mortgage through a refinance comes up, they could still continue to use that mortgage credit certificate. I'll give you an example of the math here because I know this is kind of getting outside the DPA world, but we love mortgage credit certificates, and there are many states and some markets around the country where there's an MCC available, and they're definitely worth it. It's a great benefit long-term for your buyer. So let's assume a $2,000 home price. You can tell this example is a little bit dated because we're going to assume a 4% interest rate, which seemed really good when we made this example. And look at us now, right? Nonetheless, $200,000 home, 4% mortgage. If they paid interest, 12 payments in the first year, that would be $8,000 in interest paid. Now, a mortgage credit certificate may allow you to claim 10%, 15%, 25%, 30% of mortgage interest paid as a credit. In this example, we'll say 25% of the interest paid can be claimed as a tax credit. That would be the IRS limit of $2,000 for that year. The IRS, except in some circumstances, will cap the mortgage credit certificate tax credit at $2,000 a year, but that's still a big tax credit. The other $6,000 in interest paid that year can still be itemized per the mortgage interest deduction rules. So you don't lose the deduction, you gain the tax credit on top of it. So I'll leave it at that for MCCs. They're great. Find a lender that offers these as well. If there is one in your market, you can use our systems and our platforms to find out if there is. Now, I want to get into some unique features and benefits before we get into Q&A here. And we want to take a look at what's going on in the chat and your questions. But let me walk you through some unique features, some unique opportunities to help more buyers. We've broken down the 3 most common types of programs. Here are some other things to think about and to know. Many, especially state housing finance agencies, but many program providers will offer additional benefit in targeted areas. Those are areas typically with higher foreclosure rates, lower incomes, targeted for redevelopment. So in targeted areas, you will often see a waiver of the first-time homebuyer requirement. If they have a program that requires you to be a first-time homebuyer, some programs will waive that requirement if the buyer purchases in a targeted area. Sometimes you will see more down payment assistance money from a program in a targeted area, or programs available in those targeted areas that offer more down payment assistance than outside those targeted areas. You will also see higher income limits and often higher purchase price limits, but they are unique to specific locations, typically bounded by census tracts, maybe a whole city, sometimes a whole county, maybe a zip code, or bounded by certain streets that make up a neighborhood. But targeted areas can offer some unique and valuable incentives. Targeted professions, I mentioned some of these earlier. If you're a municipal employee or a healthcare worker, a first responder, law enforcement, educators, there are in some markets, various types of hero programs or others that will offer unique assistance or benefits to those working in certain professions. Now, each of these programs may themselves be different from each other, but point is, check what's in your market, ask questions about what your client does for a living, and maybe there's an extra program in that market for them. And then military background. If you have a client that is a veteran or is active, maybe even in the reserve or the guard, then see what kind of down payment help may be out there in your market for them, in addition to what's available to the general public, because military service can open up the door to maybe 1 or 2 or 3 additional unique opportunities that are exclusive to those with military service. Often you will also see that veterans do not have to be a first-time home buyer, even if the general public does. That's a very common benefit for veterans. And they can be combined often with VA loans. So we hear all the time, well, if they're a veteran, they don't need a down payment. An eligible veteran can do a 0 down VA loan. Sure, that's right. 2 things though. 1, what a great benefit to offer equity in that home up front by connecting them to a down payment assistance program. And 2, they still have closing costs. So what a great benefit to cover the closing costs. And that leads to that scenario that I mentioned earlier. If you can go to the seller and say, hey, we got a VA, we got a veteran here, we got a VA loan, 0 down, we got a down payment and closing cost help program that's going to cover all the closing costs. We don't need that from you. Here's a more competitive offer. What a great benefit for a veteran. I'll give you an example of a program. You can go look this up or find it in Down Payment Resource. The Penn Fed Foundation offers the Dream Makers grant. It's a 2-to-1 match as a grant. So For every dollar the veteran puts in, they'll match as a grant up to $5,000, and the veteran can use that to cover closing costs and make a more competitive offer. So more details about that in down payment resource, but that's one to look at for veterans, especially if you're in a military market or there's a base nearby. Great way to generate business and offer value or add value to those veteran home buyers. All right, now, how can we help you access all of this information? Hopefully this helped. Hopefully this gave you some more insights, more intel, a deeper or broader understanding of down payment assistance and the opportunity that these programs can present. But how do you access all of this? Well, anybody can go to downpaymentresource.com and do a search for programs in your area. It's free. You're not obliging yourself to anything. You're not committing yourself to anything. You can just go do a search. We do that on purpose because we want people to know that these programs are out there. So downpaymentresource.com, you can search for programs anywhere in your market as many times as you want. If you are in California, if you are a member of the California Association of Realtors, you can get a little bit more information about the programs available in your market all across the state by going to downpayment.car.org, or you can send your clients and by the way, downpayment.car.org is behind your car member login, but it's got all kinds of marketing collateral, marketing support and so forth to help you, understand and promote these programs. You can also direct your clients to do a search for down payment assistance at finddownpayment.car.org. They can do a search, see the programs, get a little information about them. Now, if you are interested in a little more detail, a little more robust integration, and you are a member of one of these MLSs, these are our MLS partners. More coming soon, but if you are a member of any of these MLSs, you have down payment resource information integrated into your MLS platform such that when you are looking at single line or agent detail views of a listing eligible for any down payment help based on location and price, you will see a button just like one of these that tells you, first of all, that property is eligible for some kind of down payment help. Click that button in your, whether it's Matrix, Paragon, Rapatoni, Flex MLS, whatever your platform is. If you're a member of one of those MLSs that we just showed, look for this button on single line or on listing detail views. You can click it. You can see all the programs available for that property and drill down into their details. That's a member benefit for those of you who are members of one of these MLSs. And then your clients will also see the same thing in your client portal when you send listings to them. Now, if you are not a member of one of those MLSs and you want lead generation capability, then you can use Down Payment Connect. This is free if you are a member of one of our MLS partners. You can subscribe if you are not a member of one of our MLS partners. And I promise we are trying to get more and more MLSs signed up and on board. But if you want lead generation, access to information about these programs, if you want to spread the word and you want a quick, easy, simple, fun, automated way to do it, then go to downpaymentresource.com/DPC. And you can look at the benefits for the realtor version, which gives you a personalized lead gen landing page. No, you're not buying leads. We're just giving you a lead gen tool. You can generate unlimited traffic and leads from that page. It's yours to put out there on social media, email marketing, your website, and so forth. There's a loan officer version that gives you a little more information about programs, some research capability, and a few other features. But Down Payment Connect gives you a way to educate, a way to engage, a way to let buyers complete a program search. You get to generate leads. You get to tap into growth market opportunities, use it in your digital marketing campaigns, and explore details about all the down payment assistance and home buyer programs in your market. So with that, we'll leave you with a couple things here. What's the renter mindset right now? Low interest rates, leverage them. The mortgage process is complicated. Help me understand it. I'll adopt technology, put it in my hands. I have misperceptions about down payments. Re-educate me and help me overcome them. Those are the things that the renter is going through or the renter needs right now. The reality is a lot of them are leveraging credit to sustain their lifestyle, especially as a sort of reaction or a consequence of COVID. However, some may be saving money by working remotely. They don't have the commute costs. Maybe they've already downsized on their home. Um, some of them may be rebuilding employment history. People are going through a lot this year. Some of them may be dealing with income instability or fragmented income. So that's going to be something that they're going to need help overcoming. A lot of them, if they're not saving money or they're dealing with income instability and employment instability, they're going to need cash to close. They're going to need help to close. Those are things to think about. And we're trying to put solutions in front of you, but those are some of the obstacles you may come across. And we hope that what you've heard and what you've seen today will help you combat those issues as they arise, because they're coming. Lastly, join the Down Payment Insiders. We gave you a lot today, but we want you to take it away and run with it, have fun with it, educate with it, encourage and empower buyers with it. Down Payment Insiders is a Facebook group that our marketing team curates. You can see the URL here. This is about 7,000, mostly realtors, some loan officers around the country that are sharing ideas, best practices, challenges, solutions, the things they've faced and the solutions they've come up with to market to first-time home buyers, to leverage down payment assistance programs. They're telling success stories. They're sharing obstacles that they faced and marketing strategies that worked and didn't. So it's a forum for you to listen in or to engage with your peers all over the country. And it's all about first-time home buyers, down payment assistance, and working together collaboratively to serve more buyers. So we encourage you to join the Down Payment Insiders. And with that, Mel, Fern, Tamara, Veronica, what's going on in the Q&A? Let's get into some Q&A here and answer everybody's questions.
Hey, Sean, if you want to do it, we do have that final poll available.
Yeah, that would be great. So let's put that up. You know, guys, we've been tinkering with this idea recently about going to the next level of realtor loan officer engagement. We do a lot with MLSs and realtors. We also at Down Payment Resource do a lot with lenders and loan officers. We'd like to know if you would be interested in a live webinar where we can bring both audiences together to have some open, candid, frank discussion about the benefits and challenges of down payment assistance and getting it done and working as a team. So if you think that would help you, tell us yes. If not, then we won't plan it, we won't bother with it, and we'll move on from the idea. But if you think that you would be interested in a forum or an experience like that, then we would be happy to plan that and put it together and bring the audience together. We would then, of course, count on your participation. But nonetheless, okay, so, well, that's pretty clear. We can just move on. We'll do it. All right, good deal. So let's get into Q&A. If you have any questions afterwards, we're going to try to get to as much as we can here for a few minutes. But you can always reach out to us at info@downpaymentresource.com. And you can always go to downpaymentresource.com to learn more about us and check out Down Payment Connect and so forth. So with that, Mel, Fern, Tamara, Veronica, what can we answer? How can we help everybody?
Hey, Sean, can we just go over again how a realtor, how somebody would want to search a program on our website, how they can see the approved lender list? Because we're getting quite a few questions about approved lenders. And since each program has their own list, can you just kind of go over how they would find that list?
Sure. So you can go to downpaymentresource.com. You can do a search for programs anywhere. When you get your results on the screen, you have the ability to click a learn more button. It just gives you more detail about that program. One of the first things we give you is typically a link to the program provider's published list of participating lenders, approved participating lenders. Now, not every program provider, especially at the local level, publishes such a list on their website, but we'll get you everything that we have about the lenders that agency has approved or that participate in that agency's program. Now, not every lender participates in DPAs at all, or not every lender works with every down payment program. That's a great way to start. I would also point you to your own lending partners. It may be that you work with a brand or even with a loan officer at that company that has access to down payment assistance, but maybe it just hasn't come up. Maybe the last couple of transactions you did were not DPAs, it wasn't relevant, so it hasn't come up in conversation. I would talk to your existing loan officer partners first, see what down payment assistance programs they offer. And if you need to explore other opportunities, you can use our website. If you are a member of one of our MLS partners, anytime you use down payment resource inside your MLS, click the DPR button from a listing, look at all the programs available, open one up, look at the details, and there you'll have the list of participating lenders as well.
Okay, and just as a reminder, folks, we are not program providers. We are not lenders. We are basically a third party that just provides this information. So none of these are our programs. That's why you kind of want to do the research to find out within your own state which programs are available. And from there, you can find out which lenders are approved. So it does vary by program and by state.
Good point. What else?
Great. Sean, there's a question that comes up often, and that question is, are interest rates higher when a buyer uses a DPA?
So that depends. There are some programs who fund the assistance through what's called premium pricing, which means the interest rate goes up a little bit and that funds the down payment assistance. That is not how every down payment program works. That's just one way of funding down payment programs. There's plenty of that out there. There are funds that come from HUD through the HOME program or Community Development Block Grant. Some states have their own state funding sources. State housing finance agencies may use bonds or bond revenue to fund programs. So there are a lot of different ways that a down payment assistance program can be funded, which I guess inherently impacts the rate. But if you're just getting a DPA from a city, then you're just going to get a mortgage from any lender like you would any other time. So it's not that all DPAs work that way. That is one model for down payment assistance. What else do we have? Any common themes here? Any questions being repeated?
Well, Sean, do have a question, and I don't have the answer for this. I don't know if any of us do at this point, but how does the housing bill, basically the Biden housing bill that he's looking to implement, affect real estate and DPA? Good, bad, and why so? And I'm not sure we even know that yet.
Yeah, I think, well, I'm not the one to answer. I don't know enough yet. Plus, nothing is passed, so it's speculation until it's passed, as with any bill. I can tell you this: the last time the Senate Appropriations Committee met, they approved a status quo plus small increase to both home and CDBG. Those are two major funding sources from HUD that go to entitlement cities all over the country. That is, again, just one mechanism for funding down payment assistance, but it's a good sign that that money has so far made its way through Congress, but again, not passed yet. So yeah, I don't know that it's necessarily our place to speculate on what the impact of any housing bills would be on anything, inventory, market. I guess I would just say, this has been a banner year for down payment assistance. I think if anything, this year has awoken the industry to the fact that down payment assistance is a serious and permanent solution to a lot of challenges faced by yesterday's, today's, and tomorrow's buyers. But Fern, Mel, Veronica, speak up if you got anything to add to that.
Mm.
All right, what else? Any trends in the questions here? I see there have been a lot of questions. So
here's one. Let's answer this one. If a client is putting 20% down payment, can they still use down payment assistance? And I'm going to answer that with a big yes. If they meet the requirements and the income limits, of that specific program, which a lot of them are very generous, then they can. That's where OPM comes in, other people's money, which is basically keep your money in the bank and use other people's money, which is down payment assistance. The last thing you want is a buyer to use the last cent they have in the bank on down payment, get into a house, and then they have nothing to fall back on. So yes, if you have the down payment, most of the programs do not have a requirement as far as assets, although some do. So you look at the guidelines and you can educate them that way. But most of them, most of the state programs don't have asset requirements. But like I said, some do. But yes, you can use it.
All right. I might just fly through some of these here.
Yeah, there's one that just came through, Sean, that they're asking if DPA is not available for people buying homes or condos for rental. So I guess this is regarding investment properties.
Yeah, so the condo part, no problem there with most DPAs, but it does have to be your owner-occupied primary residence. These programs are not available for investment properties. They're not for investors. They're for owner-occupant buyers who intend to occupy that home. Let's see, Razak asks what DPA programs are available in California. You can use downpaymentresource.com to figure that out, or you can also go to finddownpayment.car.org and you can get a little more information about each program that comes up in your search there. So John, try that out. Let's see. Sandra asks, there are some houses that are specifically for down payment assistance and first-time home buyers. Is there a link to find these? No, Sandra, that's not exactly how it works. It's not that there are some houses that are specifically for down payment assistance. It's that up to a certain price point in any market, there are down payment assistance programs available for any house to any qualified eligible home buyer. And what we do in your MLS, if you are a member of one of our partner MLSs, is we flag those properties that are eligible for any down payment help because of where they are and the price that they're listed at. And we show you which programs would be available at that location at that price. So it's not that there are houses out there that are sold with and for down payment assistance. It's that location is an important deciding factor as to what's available. So Sandra, hope that helps.
Well, and Sean, real quick, I was also going to add to that, not only will it help find target homes, right, low tract, specific tract, but it also will help if it does fit into that target area per the agency that you're getting the DPA from. It may eliminate a first-time home buyer requirement, right? So you could sometimes be a repeat buyer when you are specifically purchasing in those locations. So that's,
Sure, yeah.
I wanted to point that out too. One question I did notice as well that has come up a few times is there a requirement to disclose a DPA to the seller?
So that's going to vary by a number of things. First of all, state and state law. Tamara, maybe I can lean on you for that one.
Well, when you're disclosing, depending on the state, when you're disclosing on the contract, you have to disclose what type of financing you're going to get. And so I don't know of any laws that require you outside of FHA or conventional. However, don't be afraid to tell the seller the program that they're going through. This is where you can be an advocate for DPA by educating the listing agent, who can then educate the seller. This is what creates, a cohesive bond and more of an education when you properly explain DPA, and honestly that it should not take any longer to close a DPA loan than any other loan. If you have the right team, then you get to where you want to use that. It's advantageous to state that these people have the money for DPA, because then you don't have to worry about them having it. So I don't know that there is a law requiring you to, but I think it's good business to definitely do it and not shy away from it.
Yep, agreed. And if you've got left over from that program for closing costs, you should bring it up, because then you don't need to ask for closing costs and you can make a more competitive bid.
And just a side note, if you're trying not to disclose it to the seller, some of these programs require a seller to sign a seller's affidavit. So some programs require sellers just to sign a document, not asking them to give any money or anything, but to be aware of the program. So you really have to be careful what you're doing in deciding not to disclose something.
Okay. Let's see. Marianne asks, can down payment assistance be used for lower value mobile homes, such as for retirees? Let me break that apart into a couple of components. Mobile homes are typically not eligible. Manufactured homes are different and permanently affixed on a foundation. And in some cases, in I'd say probably 20% of programs out there, roughly, maybe a little bit more, will allow manufactured homes. So there's a distinction between mobile and manufactured. We're seeing modular as a increasingly eligible property type. But I want to separate the retiree piece from that. So retirees are not disqualified from a mortgage, nor are they disqualified from down payment assistance. You use the income that you have to qualify for the mortgage you can afford, whether that's fixed income or employment income or whatever else it may be. So Marianne, I hope that helps. Can DPA be used? Go ahead.
No, I'm sorry. I think you were about to ask a question. I've seen this come up a couple of times. Can DPA be used for refinance?
Yeah, so almost exclusively no. There may be a few rare exceptions, but for the most part, down payment assistance is all about the purchase event. It's about helping the buyer into the home. And that was from Laura and probably others. So Laura, I hope that helps. What are some top strategies when doing lead generation with your program? Charles, great question. We actually have a great webinar we do every other month in rotation with this one that is all about marketing strategies. So Charles, we encourage you to join that. We will send out a registration link for that for the January session. It's all about Down Payment Connect and using Down Payment Connect in email, web, Facebook, Instagram, LinkedIn, and other marketing. We go through examples of what your peers all over the country are doing successfully. And you can go to, if you have Down Payment Connect, whether you through a paid subscription or through one of our MLS partners, go to the marketing resources link where you got your Down Payment Connect link, and you've got all kinds of content there to help you. Let's see.
There was another one from Steph Gray regarding programs that work with people in social services. Looks like Tamara, you just hit that to answer live. So
yeah, I wanted Sean to address that one.
Yeah, sure. So let's do that, and then Mel, can you put the marketing resources link in the chat? Looks like Aminata and a couple others are asking for that. So what's the question, Tamara?
She says, I haven't seen any programs that work with people in social services such as DCS, trauma informed care, social workers, case managers, etc. Do we know anything about these?
So yeah, Steph, anyone in any of those professions is potentially eligible for all the DPAs we've talked about today, except for perhaps some hero programs. Now, here's the thing about those. I don't want to confuse the fact that there may be programs out there for those in a medical profession and imply that you have to be in a medical profession to get down payment assistance. All we were saying with targeted professions is that in some markets, there are sometimes programs that are specifically for people in certain professions or with a military background. But everyone has the opportunity to try to qualify for all of the DPAs in a given market. So there may be a healthcare worker DPA or a hero DPA that includes healthcare employees in your market. It may or may not include the people that are in the specific professions you talked about. And that's the thing about these programs is you got to read the details about, okay, if it says it's for educators, does that just mean a K-12 teacher? Sometimes it doesn't. Sometimes you can be a custodian, a librarian, a parapro. You could be at a county ISD office, school district office. So it depends. Even if there was a healthcare program, some of those specific jobs that you mentioned may or may not be eligible, but they should go look at all the DPAs because they can be eligible for any number of them. So I hope that helps. Let's see.
We got one here. Anthony, can you just clarify what you're asking? Is the down payment assistance program approved on the pre-approval process from the lender? Okay, I think I know what you're asking. Well, the answer could be yes or no. It depends if the lender has pre-approved the borrower, the buyer, based on going through a DPA program, then yes, they would be pre-approved. If a pre-approval happened and then after that the borrower decided they wanted to go through DPA, then that initial pre-approval isn't going to be for the DPA. So if that's what you're asking, then I hope I answered that question.
Yeah, I think that covers it. Let's see. Michael asks, I think, Michael, your question is, what's the evidence of a HUD-approved housing counseling course being completed? They actually get a certificate, and it's got a completion date and presumably an expiration date. That's literally and physically what they get, if that was your question, to indicate or prove that they completed that homebuyer education course.
Sean, can you talk a little about layering? A couple of questions have come up regarding layering programs.
Yeah, and one more thing about homebuyer education. Do make sure that every program may have. Some programs use the same homebuyer education platforms. Some use different ones. It is important if you have a specific DPA program in mind, that you use the homebuyer education course or provider that down payment assistance agency requires. As far as layering, it is possible to layer down payment assistance programs. Each program is different in terms of what lien position they'll take, which programs or kinds of programs they will layer. I'll give you the short, quick answer. Yes, it's possible. Rely on your loan officer to figure out the path to multiple DPAs if it's necessary. Do keep in mind that effectively your buyer has to qualify for the most restrictive of the requirements of each program. So, one program may have a higher minimum credit score, but lower qualifying income. Well, you're going to have to meet the most restrictive requirements of each and every one of those down payment programs that you layer. But yeah, I mean, it's possible, not universally, but it's certainly possible. And we've heard people layer, 2, 3, 4 DPAs. The most I've ever heard was I met a real estate agent in person who had layered 8 down payment assistance programs. That's obviously an outlier and an anomaly, but it's proof that it's possible. So you got to know what you're doing layering all these, and you need a loan officer that can do that. But typically 1 is enough.
Yeah, I used to do 4 at a time, and we called it, that was the Big Mac sandwich right there. So yeah, you can definitely layer them, but like Sean said, you absolutely have to make sure somebody knows what they're doing.
Yeah, that's where your loan officer becomes key. And again, I don't know if we can get to every question because we still have them coming in, but I want to reiterate a couple of things here. Get a trusted loan officer partner on board with you. If you don't have a loan officer already that understands these programs, works with a number of them, and can help guide you and your client and the seller and their agent and coordinate everybody, then that's your first order of business. Is look at the participating lender list, talk to your loan officer network, figure out which loan officers you can work with. Here's a trick or a tip. Go to your state housing finance agency website. You can get that through any of our tools, and look at their list of loan officers. If they publish like a top producing LOs list, or some housing finance agencies will break down their top producers by region or by certain markets within the state. Those are the folks that are the best and do the most of these DPAs, and they probably want your business. Let me point you to a couple of things before we have to hop off here. I'm going to go back to our MLS partners. If you are a member of one of these MLSs that I've put back on the screen, you already have DPR integrated into listing data. You can see this down payment button on agent and client reports in your MLS. You also, if you're a member of one of these MLSs, have Down Payment Connect for free. and that's your lead gen tool. Just go to your MLS dashboard, click on down payment resource, and you're right there in our dashboard with all your lead gen link and marketing resources, etc. If you want to start marketing and generating leads with our lead gen tool, you're not buying leads, but you can go to downpaymentresource.com/DPC and you can subscribe to Down Payment Connect there. Don't do it if you're a member of one of our MLS partners. You already have it. If you're not a member of one of our MLS partners, feel free to bring us up with your board or with your broker. We're happy to talk to your MLS and try to get in there. But you also have the option to subscribe to Down Payment Connect. It's $24 a month for the realtor version. So it's super affordable, unlimited traffic and leads. We're not selling you leads. You're generating leads through a unique landing page that allows buyers to come to you and search for down payment programs and connect back to you and only you. It's not a lead carousel. It's not a lead buying program. We're just giving you a tool that lets consumers search for DPA and connect to you to take the next steps. You get information about the programs they find and the leads that are emailed to you. And that's where you can get creative. You can go out to your digital marketing, your social media marketing, and get creative. Just make sure you've got that loan officer partner or partners in place that can onboard, pre-qualify, and help with down payment assistance.